Ladies and gentlemen, welcome to the Midday Market Madness. In today's video, I'm going to do a little bit of a brag and then a little bit of a opposite of a brag, whatever you call that. A little bit of a, complain, I guess. NVIDIA, 191, not the price we want, okay? But it's the news that we want. What ended up happening, I know this keeps coming back, the same story over and over and over, but it is slowly progressing. It's like we're going down a long road with many checkpoints, okay? But China approves the first batch of NVIDIA H200 AI chips for import, sources say, and this will cover several 100,000 H200 chips to three major tech firms, which is going to be Alibaba, ByteDance, and Tencent. I could be getting Tencent wrong. Let me double check that here in a second. But anyway, several 100,000 GPUs, according to Jensen Huang, which was stated a little while ago. Sorry. I'm seeing your post. This is funny. According to Jensen Huang a little while ago, he said that he wants upfront payment for these and that they will not be doing, payment terms and this sort of stuff. This could be essentially 10, 15, maybe even $20 billion worth of new revenue. High margin revenue. Okay. So whenever you're looking at this company, I'm doing a victory lap. It's not even about the need for the stock to move. I know it will move. Okay, that's what being a fundamentally driven investor is. And I'm not looking at the stock price and then deciding my actions. I'm looking at the news. I'm looking at what's going to happen with the actual numbers, and then essentially just correlating that with my future profits. Now, I'm not going around buying Lamborghinis right now because I'm suggesting NVIDIA will go up later, but I'm just walking with a little extra pep in my step. That's it. So that's that. Now, where do I start to fall apart? SoFi. Back around $25 per share. It's not the most exciting price action, but then again, whenever we're going into earnings, I find that there's so much pessimism going into this earnings, essentially down 20% since last call. The only thing that I've seen them do is improve their overall, performance of the company. They ended up raising money, raised $1.6 billion at a price of $27.50. So a large investment bank is now down on that big raise that they ended up doing for SoFi. But yeah, Tanner's sleep score was off the charts last night. I actually don't think it was. I think it was like 90 or something like this, which is good, but it's like, it's whatever. All your comments are so funny. How's the sleep score? How's the sauna? Sauna was great. I'm walking with a limp thanks to SoFi. Yeah. It's not the greatest feeling ever to be, not even down on this company, but just like, recent purchases. I actually just bought more today. But recent purchases of SoFi that are just like slightly in the dumps. But, as Sodak Zach in our previous live stream that I just did at noon, that was actually talking about, he's being funny in chat, but, he was saying, okay, well, if I'm looking to outperform the S&P 500, do I think that SoFi is essentially going to do, more than 11% or a 12% gain this year from 25? Do I think that this company can get to 27.50? I mean, the answer is a definite. Well, I mean, for me, it's a definite yes. PayPal, on the other hand, like there are some names that like, I don't know if I would I would get all too excited about those types of names. I'm not as excited about a PayPal that I am to a SoFi that's actually looking to accelerate growth rates. PayPal could absolutely turn around the stock extremely quickly if they end up coming out and saying, hey, you know what? Guidance is actually looking to be maybe 9 to 10% for next year. The whole party would just start over again. Okay, wow. We're actually thinking about improving EPS or EPS by 20%, revenue by 10%, back to double digits. Great. Then why is SoFi dumping before earnings? Dude, the market's weird, They could be getting a little bit shy about interest rates and what's going to happen there. In my opinion, I think everything that we're seeing from the new Fed governor, maybe that's Rick Reeder or something like this, would end up benefiting their company. I'm sure a not strong dollar is not great for banks either. But, those are the shifting tides. What I'm end up looking at is like, how big's their boat and which direction are they flowing? There might be tougher waters in certain areas, but we're getting, rate cuts. We're seeing a large amount of new customers come onto the platform. EPS for next year stayed consistent from 55 to 80 cents. What they said is that if it comes on the higher end of 80 cents, then they're going to have low growth. And if it comes at the low end of 55 to 60 cents, that means they're going to have really high growth. Do you guys actually care if they don't bring in a lot of growth next year, but then they have really, really high growth? Like we're talking 35, 40% growth next year again. Who complains about that? And Sodak Zach says something great here. If you're still adding, like, would you want to have purchased here at 32 or would you want to have purchased here at 25? Okay. I mean, I'll take another 100 shares of SoFi sub 25. Well, you've had a chance to today. Maybe you'll have another chance. Oh, battery is exhausted on my camera. Give me one quick second. I didn't get, or maybe I did get the warning and I wasn't looking at it. Okay. Don't worry, ladies and gentlemen. I have batteries on standby. And I know what you're saying. Tanner, why don't you plug in your camera? Guys, it literally is plugged in. It's just the battery drains faster than it being plugged in, which is craziness. And we're back. Okay. Let's see, does that look good? Yes. Good. All right. Let's get back to it. So, Intel up 11%. Is this on news? I was reading on news that Intel might be a large percentage of the future Vera Feynman chips for SoFi. That could be interesting talk here. Let's see. SoftBank is in talk to invest an additional $30 billion into OpenAI. I don't know what kind of relationship what's his name? Masayoshi and Sam Altman have, but it's a strong one. Gee. SoFi makes chips now. You know what? It's not, SoFi is not the only name that I'm buying. Essentially, I'm buying in two major categories. Cryptocurrency and finance in general, which sort of looks at, e-commerce, neobanking, payments, stuff like this. And then on the AI side, I'm looking at advertising, software, chips and infrastructure names, cloud compute, that sort of stuff. Okay. Yeah, word on the street is that NVIDIA is going to start using Intel. That is the word. We'll see, nor do I think I even care. Nebius with big green candles? Nebius with big green candles. Not a super amount of green candles. I mean, I didn't see anything, but we will know a lot coming this earnings. So guys, I'll be live for Meta, Microsoft, Tesla, ServiceNow. We're going to have a massive amount of new earnings this season. So get ready for that. That's going to be very, very exciting. Essentially, the way that I'm going to play this is I have, well, money on ServiceNow, so keep an eye out for that. But also Meta is going to be the big one as well. That's the one that I'm currently accumulating. I don't have any money on Tesla. I don't think that much is going to happen for Tesla. They're going to talk about some of their new advancements on full self-driving, maybe changes to the one-time payment if they think that they can drive, recurring revenue there, sort of take a car model and turn it into a software company, which was the big bear argument that they'll never be able to do that. And boom, look at it now. We can check that out here. Tesla up 1%. Actually, nice little green candle movement here. Meta not doing so well on the day, but still back to 670 going into this earnings. Much better than where, we were before. So guys, honestly, here, can we do a poll? So this is a little bit of a conflict. So I absolutely want to go live with the boys, and I can even, show our DMs here. So I'm talking with them. My only problem, and I'll just be, candid with you guys. I can show this screen right here that shows the stock price, or I can go in and look at, a web page that ends up showing me an earnings call or listening to this. These are the problems with the back end technology that I'm using. So let's run a poll really quick. For SoFi earnings on Friday, I can either stream with the lads, Roy, Tevis. I don't know if Steve will be joining us, but maybe, those sort of guys. And we can listen to the call, but we won't have the stock price up on screen. Or should I go and just do it on, a different technology, which would be Stream Labs. So I'm using StreamYard right now, Stream Labs, which will allow me to do both. But yeah, can you not share? No, it won't share audio whenever you're doing that. So those are my two options: stream with the lads, no stock price; stream solo, stock price on screen. Stream with the boys, both impossible. Okay, let's do a poll. I want to do it with the boys, but the problem is then everyone asks me in chat, or they end up leaving to go to somebody that does have the chat on screen. And I'm like, oh, I don't want that. Like I want, okay, I'll do a thing. SoFi stream with friends, solo with stock prices. Nothing is impossible, Tanner. Well, I'm not saying it's not. There are some solutions, like I think Ben Zinga or whatever has the ability to do both. I haven't been able to figure it out. I got to ask Amit about that. This sort of stuff. Jeff, I agree. You guys have the price on your own, but people don't. People don't like to do that. They want me to show the price. Covering earnings and not the stock price is kind of lame. By the way, he did not say lame. I turned it into lame. stream with the lads. Audience is going to be looking at their brokerage accounts anyways. Yeah. Okay. Yeah, Chris will not be there. Chris will not. Have you started a position in Zeta? No. If I could add, like, maybe we can stream it with the boys. But then if also I can get some help from you guys to let us know if there's big changes in the price, that you type it in chat, and then I can take your comments and put them up on screen. So if you write out something like, SoFi 2550 up 1% or something like this, and then I can be like, oh, okay. Then that just gives us a little thing, and then I can like constantly swap it out for new comments. Just yell it like an auctioneer. No, I can't, because we're listening to the call. Okay. SoFi down 50. Yeah. It's not going to happen. I believe in this earnings, ladies and gentlemen. Let's go to Carvana down 18%. What the heck happened with Carvana? Are any of you guys in this name? 85, after dropping 18%, $85 billion market cap. Are you guys this is what we were talking about earlier, is like, if I'm to buy a company like this, speculative and growing and everything like this, I'd have to know how good the product is, potentially use it myself. I don't think Carvana is even in Canada. I've never seen it before. Does anyone actually care about the product of Carvana? And if this is another short report, there has been so many short reports on this company. Bridgecrest in an undisclosed transactions and debits last year, both Hindenburg Research and Real Jim Chanos. Let's see. Posted 2 hours ago. That doesn't even seem like, that doesn't even line up right with the timeline here. Carvana's 2023 and 2024 earnings are overstated by $1+ billion and far more dependent on related parties than disclosed. Drive Time's leverage fuels Carvana adjusted EBITDA. Without Drive Time credit, Carvana earnings collapse, and Carvana adjusted EBITDA doesn't cover its interest expense. The following reverse pyramid depicts what we believe, along with a complex interplay between Carvana's earnings and its related parties. So I don't cover this company. What is Drive Time to Carvana? Drive Time marked down its loan portfolio by $900 million, while Carvana recognized gains on the loan sale of $755 million in 2024. Drive Time generated over $1 billion in cash flows from financing activities via debt issuance from 2023 to 2024. Jeez. Jesus. Okay, let's check gold. Someone put that in chat. Let's see. Gold up another 2%. My gosh. Silver, 102. 102 on silver. Okay, let's check on some crypto really quick. Ethereum back above 3,000. Still not the breaking all-time high price targets that Tom Lee had wanted for us, even though he said, December of 2025 was going to be all-time highs. Then he said, no, January is going to be all-time highs. Then he said, no, we're not going to fall into major corrections in first half of 2026. That was Sean, and we didn't tell him to change his price target, but he did. Ugh. Bitcoin back above or back below 90,000. Crazy market. Scam Lee. No. It's not scam. I just wish he didn't wasn't so confident about things that I don't think he should be confident about, because clearly, these are speculative assets, and they're hard to cover. Hard to get the exact price on Ethereum and Bitcoin. Percent's odds are growing as Fed nominee. I won't believe it, dude. Let's go have a look at what the odds are, though. I'm sure Rick Reeder is still the large percentage. Who will be the next Fed chair? Rick Reeder is at 45%. Kevin Warsh, 27%. Kevin Hassett now at 8%. Scott Percent, I mean, it is raising, still at 7%, though. Let's go have a look. Large chance. Here, wait. I'm in dark mode. Oops, sorry. No, this is Kalshi dark mode. Large chance of Rick Reeder. It would not be bearish if it was. Okay, it just literally said that Rick Reeder dropped 20. No, okay. No, it just corrected again. Percent is a dog. Yeah, I mean, you don't lower rates, he's gonna get you. I think the dude likes to throw punches, I swear. And I didn't mean it. Percent, don't come after me. It's just my feelings. Okay, let's get back to the news. I'm done with the jokes. Anthropic now raises revenue projections to $55 billion for 2026. Guys, in the last 3 years, they've gone from $100 million to $1 billion, 10x, to $10 billion, 10x. And now they're calling for a 5.5x to $55 billion, one of the biggest companies in terms of revenue, bar none. Now, profitability is another story. But does NVIDIA care? No. NVIDIA doesn't care. The cloud names don't care. AWS, Google Cloud, Azure, CoreWeave, Nebius, they're going to get their pay. This is why I like these names. Obviously, the LLMs are I still think that they will end up hitting profitability. I know some people have some concerns about what the LLMs can even do, whether, eventually a new model like a Claude or a Gemini Flash, for example, like these smaller models will be able to run really large LLMs and essentially answer all of our questions locally on device. And then, what does that mean for the cloud companies? But honestly, I think that people are underestimating what AI can do in the future. I think we're always constantly thinking about what it can do today and not like, what are the potential new industries into the future? I'd said this earlier, but, who knew back in the .com bubble, like whenever, the internet was sort of getting started. Obviously, e-commerce and all of these things were easily foreseen. But who saw Uber? Who saw Airbnb? Who knew that those were actually going to be, great gig jobs that actually raise employment? Greatly using computers or the internet and stuff. Are you still bullish eToro? I mean, so I never bought eToro. Just to be clear, I have not made a purchase of eToro, but was interested in the name. My concern is that I have not seen a lot of customers say that they really enjoy the product. And if you're not really enjoying the product, then what keeps you around? You know, that's what sort of got me buried on my skills investment back in like 2021, like all the way back in, COVID era. It's like, yeah, the growth is there, the valuation was there, but are they just paying for users to stick around? I'm not saying that that's what eToro is doing, but that's what I'm missing. Okay. Let's go ahead, take a look at the QQQs. Still green, but not as green as what we once were whenever the market opened. Tesla's pushing. Let's have a look. I mean, yeah. Tesla earnings tonight. In a few hours, we will be live for earnings then. Okay, let me make sure that I get the Fed watch up as well. I don't think we're getting a rate cut or anything along these lines, but we'll keep an eye out regardless. Okay. I don't hear about many people using eToro in Europe, mainly using Trade 212 or IBKR. Yeah, that's definitely what the serious investors are doing. I've heard these ones as well named over and over. Okay. Why are you guys all talking about Al Gore? Nebius wants $100 today. Dude, the fact that it's not $100 makes me go crazy. Thinking about CoreWeave, by the way, listen to phenomenal all day yesterday after stream. I was listening to CoreWeave, Google DeepMind, OpenAI, all like different AI people talk about, why they're so bullish and what's coming into the future. They obviously differ in some opinions, obviously, but overall, I'm bullish. Now, it's just a matter of what plays can I invest in that allow me to get good access. Vlad Tenev talked about this. Like, retail investors don't have good access to these AI names until they're, really, really late stage, multi-trillion-dollar businesses. So what's the best way to get access to AI and robotics? It's like NVIDIA and Tesla and all of these names. What are some small, public, really, really great AI names? Like there might be some interesting plays in terms of vibe coding stuff. Base 44 with Wix, that might be interesting. Yeah. Tanner, how come it never notifies me that you're live? Amit, Steve, and Matt always had a reminder that you're live. Well, you have to hit that. That's on you, brother. You got to hit the bell down below. That'll remind you. I don't control the YouTube algorithm. Okay. Grab. Where's Grab? I'm going to have a conversation with Amit about Grab after earnings. We were talking about doing it yesterday, but then he was like, honestly, it'll just be so much better if we have full year data. If we have, 2026 guidance. I'm not even done building my position in Nebius. I don't care about Iren. Sorry. Just going through the names and the, two different things. One, the deal structure with the Microsoft deal didn't seem very favorable to me. It seemed like it was more for press releases than anything. The margins are really small. So didn't like that. And then I didn't like where they placed on the cluster max ranking from SemiAnalysis, which is the gold standard for all these different cloud names. So CoreWeave is the only company that's in platinum tier, by far the highest, above and beyond, most innovative. Like that name a lot. And then Nebius is gold tier with the likes of Azure and Oracle. And actually, funnily enough, AWS and Google Cloud, which are two names that I also hold, are, below that in silver tier. Okay. SoundHound, I also like, maybe it does well, but I just think that there's so much uncertainty with that name in terms of like a young AI name that's going to do really, really well. CoreWeave compared to Nebius has a concerning balance sheet. Personally, I'd rather have a concentrated position in Nebius. Yeah, but I love like concentrated balance sheet, or sorry, concerning balance sheet. Maybe, like they definitely do have debt. But then you look at their close relationship with NVIDIA, and it's like, do you think that NVIDIA will ever let this company die? Like, they're backstopping deals to essentially say, like, hey, if these customers end up canceling their plans early, like they can't sign extremely long-term deals. So if they can't sign extremely long-term deals, we'll buy up the scraps. If you can then rent out those GPUs to another customer, you go ahead and do that. We don't need your compute, but we'll find a reason to use it. I might be missing it on IREN. I'm not bashing your positions. It's just those are the reasons. I'm not saying the reason why to invest or not to invest. I'm telling you the reason why I chose not to take part in IREN. I really like Nebius, and I'm thinking about starting a position in CoreWeave. Yeah, and the whole problem with depreciation and everything too is so false. Like, even the older chips are fully booked out. The demand for all of their chips are like, there's so much desire. CoreWeave is the only and real son of NVIDIA. It might be. Didn't know you had a Twitch as well. There was a couple days in a row whenever YouTube was going down, the whole internet was like having problems with like, Google Cloud and AWS and all of them having like problems. So I just diversified into another. It's free for me to cross stream, so I just thought might as well. What about TSMC? I think TSMC is a great name. I think they're going to do very well. That could be another great name. But I'm also starting to think like, yeah, the infrastructure plays are going to do very well, like NVIDIA, but also with the concerns of the depreciation. Like let's say CoreWeave and Nebius are all right, and they're like, actually, the depreciation is not as bad as people say, and that you can run some of these chips 10 plus years, right? You have Ampere doing extremely well, and customers are still coming back for Ampere access, which is before Hopper. Well, if that's the case, like, what if there is a cap on how many chips that NVIDIA could end up selling? What if we do hit some level of capacity? If that's the case, then maybe a TSM, maybe an NVIDIA, a Micron, some of these names suffer, but the cloud names won't suffer because the demand's still there. You're still renting out by the hour. You're still using these services, and over time they keep developing, more services like storage, for example, in CoreWeave's case. So then, like the reoccurring nature, the fact that the depreciation might actually be longer not shorter, not what Michael Burry said, not shorter than expected, but actually longer than expected, goes to benefit the cloud names. Also, so a couple things. Vera Rubin, I want to talk about. I want to talk about Vera Rubin really quick, just on the cost of their, VR NVL 72s. It used to be 174 or 144. People got confused, so they're not doing that anymore. It's just the Vera Rubin NVL 72s. The price supposedly that they're selling those for, is $5.7 million US dollars, where the Blackwell NVL 72s, from my understanding, were $3 million. So they're nearly doubling the cost of the rack scale systems. How does that show up in their margins? How does that show up in their revenue? We'll see. Is Palantir worth buying at this current price? Well, talk about recurring annual revenue. I think that's great, but exactly what's happening with Palantir right now is what I feared. Best business ever, and you're holding it from 210 down to 160 because what's the difference of a PE of 400 to 370? If there's any shake, if there's even the slightest miss, the slightest hiccup, this company's stock price is just going to get demolished. Now, we haven't even seen a miss. This is just general overvaluation fears. But Palantir literally might be one of the best businesses ever. I do agree. Whenever you look at their financials, the overall earnings that they're posting, the net dollar retention, the customer growth, the margins, free cash flow, everything, it might be one of the best financially sound businesses I've ever seen. It's just the price to pay for that's too high. You still in Axon? No. Not in Axon. Yeah. I think there's small pieces of news with Axon, like not news like this, but I actually don't even want to say because it can get a little political, but I just thought, maybe their current flagship product, TAM, might not be growing as fast as people originally hoped for. Hey, isn't this the juggling guy? Why are you looking at stonks? Yeah. No, I get you. I get you. It's very funny. Okay. The FOMC press release is at 2:30. We'll watch that. Or I don't know if can I watch that? Do I have time? I have time. Are we seeing silver correcting? Oops. No. We're still above 100. There's no correction here. Okay. I'm not buying Meta until after earnings. And you know what? That might be the wrong statement. It could maybe jump up after earnings. I just think that if Mark Zuckerberg is clear in his mission statement, which is that they are going to spend so much more on compute and CapEx is only going to continue to climb over time, that investors are going to have the exact same concerns that they did last quarter. It's only going to I don't know how that changes from quarter to quarter. Did you buy any stocks reporting today or tomorrow? No. Okay. Hey, isn't this the juggling guy? Okay. Let's see. Do a short-term swing trade. No, I'm not really a fan. I'm buying more Palantir now and more if it drops even further. But what's your end game? What's the end game? When do you think that this company hits $1 trillion? Not tempted by ServiceNow? I have a position in ServiceNow. I've got a decent position in ServiceNow. Bigger than you guys would think. Okay. What is this? You juggle? No. There's a guy on TikTok that juggles that looks like me. He doesn't even look like me that much. You know? I'll sell it whenever I retire. Yeah, but it's not just about that. It's like, do you think like either, and I don't know when you're going to retire, but you're telling me that there's not another name that you like investing in that you think is going to do better over 5, 10, 15, 20 years? I mean, maybe you don't, in which, yeah. Don't you get a little pissed when someone looks like you? What? No, it's just this guy's like he's a little goofy. He's juggling and dancing. And someone sends it to me every single day saying, "Is this you?" I'm like, bro, no. Um, okay, so let's continue with the news. PayPal's latest survey shows that 39% of US merchants now accept crypto at checkout, and 84% believe crypto payments will become common within 5 years. 84% of that 39%, I assume. NVIDIA announces that their compute tray assembly time, which is true, by the way. Jensen said this during the CES event. Okay. Of the VR 200, which is the Vera Rubin 200s, had fell from 2 hours to 5 minutes because of their cableless and hoseless design. This allows for more automation as robotics still have difficulty plugging cables into the correct ports, and that this actually puts them in a different league comparatively to AMD that still is not in this cableless design. What does this mean for the time that it takes for assembly of these, the time that it takes for the actual setup and design from data center companies to set this up, like a CoreWeave at Nebius and AWS or any of these companies that are building out the data centers? You should have seen, like, it was literally click and play. Like it was super easy from Jensen Huang on the new Vera Rubin system. Maybe this actually allows them to not only assemble and make these chips even faster, but that customers can even buy them faster, set them up, and see results quicker, which would allow them to, make heavier investment. Let alone their investment in things like InfiniBand or SpectrumX or all of these different networking devices that actually allow them to purchase even more chips because they are unified and work together even better, right? SoFi is down again. Fully aware, guys. Yeah, I know, it's crazy. Robots can't figure out how to consistently plug cables into ports. Really? You're talking about really, 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 really small ports. Like you're talking about like tiny. You're thinking of like an Ethernet port. DDI joining SoFi is such a wealth changer for Chris, not because stock options are salary, but because Duolingo is down 53% the last 3 months and he had to sell. Why did he have to sell it? They forced him to liquidate his entire equity positions? That can't be right. Do they have to flip the USB too? They're like trying to push it in. They're like, oh, wait, no, it's the duck lips. It's got to go that way. Yeah. Tanner, get a haircut. No. That was a bad look. This thing just keeps going. I want to see if it can go all the way to the back. Just no. Are you buying SoFi under 25? I just bought today. I'm pretty excited about it. Am I going to buy more right now? No. I want to have a little bit of cash. I want to go have a little bit of cash for the big earnings that we're going to see today. As James said in chat, it's Happy CapEx Day. Okay. The amount of spend on chips that we are going to see, not only via guidance, but in this quarter alone, is going to blow my freaking socks off, man. I can't wait. And SoFi is not the only existing company that you can find, potential upside in. Meta recently just got another upgrade today, 870. Sorry, that was yesterday. I lied to you guys. The day before that, ended up getting a $900 price target, a $1,100 price target, 875, 810, 808, 800, 810. That was all yesterday. NVIDIA as well got an upgrade today, 275, up 43%, 37% upside on NVIDIA. Biggest company in the world. Actually, is that even true right now? Yes, it must be, because Microsoft took a big crap as well. Microsoft. Yeah. Oh, yeah. They're $1 trillion off. I'm jacked. I'm jacked to the tits. Do you feel it? No. Hopefully you guys know that movie. Great movie. Top 25 movie of all time. Little Ryan Gosling, little Steve Carell. It's not the first time they've gotten together to make a good movie. What is it? Crazy Stupid Love. There you go. Good movie. Not a top 25, but your girlfriend accidentally got the TV remote. Shouldn't happen, but she gets it. You have to play Crazy Stupid Love. You just have to sit through it. It's a good movie. The Big Short. It's Amit's new nickname. I watched Margin Call over the weekend. Another good one. Okay. Let's check out NVIDIA, up 1.7% today. Apple down 1%. $3.75 trillion market cap, putting Apple back above Microsoft. Bro. Sorry, Google is the second biggest company now again. Yeah, I forgot. $4 trillion. Well, guys, sorry. Sorry, dude. Isn't Amit like 5'7"? He's brainwashed you guys to think that he's 5'7". He is 5'6". I literally remind him every time I see him. I'm like, just so you're aware, like, I could take you. Like, you got a bigger channel than me. I just want you to know that I could physically dominate over you. The part he probably would love that. So I don't ever put my hands on him. He's a little freaky guy. No, I'm kidding. I love the guy. You can only make fun of your, good friends. You don't actually make fun of people you're not close with. That would just be mean. Okay. 10 minutes until the FOMC. Okay, so I'll keep that up. We'll look for that whenever it gets released. But I'm very, very confident that what we're going to see is no rate change. If we end up seeing a rate change, I don't know. Maybe Jerome can keep his job. But we're not going to see that. And honestly, I don't think it changes any of my investment beliefs or anything like this. Okay, wait, real quick. 11 Labs just partnered with Revolut for customer support. A company that's redefining financial services can now and be scaled to 70 plus million members globally. They are seeing 8 times faster resolution, 99.7% success rate in 30 plus languages, 24/7 support. This is for 11 Labs, which is a voice solution. Think like SoundHound or something like this. Partnering with Revolut, one of the largest European-focused fintechs. Okay. Yeah, after May, we're going to see a bullish Fed. Would you buy Hood here if you wanted to start a position, or do you think it's going a good amount lower? I think that you need to put your, sort of think about it in the way of, okay, let's imagine that Hood ends up, like, yeah, okay, it goes to $95 or something. You can get a good share of Hood there. Or it turns around on retail, constant retail engagement, prediction markets, banking, all of these new products end up hitting it off pretty well. How pissed would you be if you didn't get entry today at 104 if it went back to 125? Would you purchase at 125? Or are you just looking to buy a company that you're sort of mediocre bullish on and want a good entry? Because if you're going to miss it, are you going to hate yourself for missing it? In that case, I would DCA in. Okay? It absolutely can go lower. But what you're asking is a company that benefits off of a bullish or bearish market, a bullish market. If a bearish market comes, so like Robinhood's going to get demolished, So if there's a little shakiness, then yeah. No, I do not own shares in eToro. What do you think of SoundHound? Been holding too long? I don't like it. Yeah. It feels like, I don't remember too much. I remember they were doing a ton of acquisitions focused on like every single industry. It seemed like there was not a lot of focus there. I don't know how they differentiate from, a Gemini or a ChatGPT or an Anthropic or any of these companies that end up going directly to businesses. So that's my only problem. Do you think Hood misses on earnings? What is the earnings result? So Hood has a way, way higher chance of missing earnings than almost all companies. That's because they end up showing off their monthly statistics all the way through December. So the only amount of data that we don't have on them is 3 days worth of data. 3 days, not 3 months like every other company. So it means that Wall Street can be much closer to the actual targets than many other businesses. Okay. So yes, there's a possibility that they end up missing. But what does missing mean? Do I think that they're going to slow down in growth or something like this? No, I think that the growth is going to be, above 30% once again. Five Guys are using SoundHound for ordering. Yeah, no, I'm not saying they're not they're not getting deals. I just don't know what their advantage is. You know? Do I like Shopify? Shopify is the second biggest position in my entire portfolio. Am I going to stream the Fed decision? I'm still thinking about it because I don't think that they're going to talk about much. I think that they're not going to cut. And yeah. Also, it's not just me that doesn't think that they're not going to cut. The chance that they're going to cut, according to the Fed Watch tool, is 0.6%. The market's going to move a ton if it's anything other than a cut. Or sorry, anything other than a pause on rates. I enjoy watching Powell's Q&A as well. I can watch it and maybe just go eat lunch or something. Like, I'm going to be back live here. So that means I got to go live for that. And then I got to go live once again for 3:30, 3:45 for, Meta and Tesla. Sorry. Couldn't think. Will be a cut. Okay. How much are you going to stake on that? True, you have a busy day with earnings. Sure do. Meta's call is today. I'm listening to that. And then Tesla. So they're not synced up. They're side by side. So we can listen to both. So we'll be going live for Meta's call at 4:30, then live again at 5:30 for Tesla. Okay. Stay live all day. We deserve it. Can we watch you eat lunch? Yeah, I actually don't mind eating on call too much. It's just I have to go get it, and I find any time that I just leave the stream. Okay, by the way, minute and 30 seconds till FOMC. Okay. Okay. Let's see. Let's go through some news. We don't have much time, but Elon Musk is looking for a June IPO for SpaceX that could raise roughly $50 billion, which would coincide with a rare planetary alignment and his own birthday, which is said to be quite exciting. Trump was on talking about the One Big Beautiful Bill and the Trump accounts, which are the $1,000 investment accounts for children in the United States. Okay. Let's see what else. Anthropic raises revenue project. Yeah, no, we talked about that. SoftBank, China. The biggest news for me is the China news. Okay, let's get ready. On the Board of Governors of the Federal Reserve System, and refresh the heck out of this page until it's time. I'm also going to keep an eye out on X, and let me know, guys. Keep me up to date. Okay. Do you like toast? It's not. I prefer Shift 4, mainly just based on valuation. The growths are honestly pretty close. TPV is very close. I know people have a product preference with toast, but it's extremely expensive. Like, I don't just mean the stock, the product. Okay, it is 2:00. That means the statement should be out. Let's get looking. Issues FOMC statement. Available indicators suggest that the economic activity has been expanded at a solid pace. Job gains have remained low, and the unemployment rate has shown some signals of stabilization. Inflation remains somewhat elevated. In support of these goals, the committee decided to maintain the target range of the federal funds rate at 3.5 to 3/4%. Ban that guy that said we're going to get a cut. In considering the extent and timing of additional adjustments to the target range for the Federal Reserve rate, the committee will carefully assess incoming data, the evolving outlook, and the balance sheet of risks. The committee is strongly committed to supporting maximum employment and returning inflation to the 2% objective. In assessing the appropriate stance of monetary policy, let's bring up the cues really quick, even though I'm sure we're not going to see much of anything. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee assessments will take into account a wide range of information, including readings of labor market conditions, inflation pressures, and inflation expectations, and the financial and international developments. That's it. That is what we are at. No change in rates. However, little red candles here. Was there something in here that we read that I didn't see? No. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. Uncertainty about the economic outlook remains elevated. The committee is attentive to the risks to both sides of the dual mandate. In support of the goals, the committee decided to maintain the target range of the federal funds rates at 3.5 to 3.75%. Yeah, they didn't move it. All right. Oh, yeah, where's the dissents? Yeah, Stephen Moran and Christopher Waller, who preferred to lower the target ranges to the Federal Reserve by 1/4 point at this meeting. Not even 50 basis points. Yeah, everyone decided to keep it still. Christopher Waller and Stephen Moran, who are both potentially shooting for a Fed governor position in some sort of design, called for a rate cut. Okay? But they're keeping it flat. No change. I don't know why the market is reacting so negatively on that. What did they expect? We will see at 2:30 to get more information there. Yeah, it's actually interesting that Stephen Moran wanted only a 25 base point cut, not a 50 base point cut, like what he's been calling for almost every single meeting. But I guess each and every meeting we were getting a 25 base point cut before, so maybe we're getting closer to his target range. But that's not even what he's saying. Powell's last chance to screw over Trump before he's out. No, I don't think that's what's happening at all. I didn't expect, I wanted those 3 rate cuts in 2025. But I don't know. I think that this is absolutely fine. I'm sure we will get probably 2 to 3 rate cuts in 2026. That's a large amount of cuts. You know? So we'll see. The Federal Reserve has made the following decisions. Was unanimous to maintain the interest rate paid on reserve balance 3.65% effective January 29th. Increase the system open market account holdings of securities through purchases of treasury bills, and if needed, other treasury securities will remain maturities of 3 years or less to maintain an ample level of reserves. Okay, wait 1 sec. To approve the establishment of a primary credit rate at an existing level of 3.75%. Conducting standing overnight repurchase agreements operations at a rate of 3.75%. Reverse repurchase agreement operations at an operating rate of 3.5%. And with a per counterparty limit of $160 billion per day. I don't know what it was before. Maybe that's the reason why the market is correcting, is on some of those changes. But I'm not much of a macro observer that I care all that much. I'll let someone else tell me if this is super exciting or not. The Fed halted rates for the first time since July of 2025. Said inflation remains somewhat elevated. Of course, this is true. 2 Fed governors dissented. Unemployment rate shown some signs of stabilization. They reasserted their goal of achieving 2% long-term inflation. Uncertainty about economic outlook remained elevated. Yeah. I'm not freaking out about that. That's kind of exactly what I anticipated. Nor is the market even moving all that much. Like, I'm talking about an overreaction of one simple candle. It's fine. Bought more SoFi. Yeah, what's SoFi and some of these names doing on this news? A little bit more interest rate sensitive. Same with the big banks. They can be quite interest rate sensitive. Maybe a Wells Fargo, maybe a JP Morgan. All sort of flat on the day. Citi down 0.8%, but recovered from the initial meeting. Went sort of bearish into the meeting, now green again. Nvidia, Tesla, Microsoft, Google, Meta, Amazon, Apple pretty much remained unchanged from this news, as we can see in the triple Qs or even the SPY as well. SPY especially, actually, right back to where we were whenever the news dropped. It was supposed to be a snooze fest, though. That's what we got. Honestly, the market hates uncertainty. So the fact that we came out and went, oh, okay, everything's exactly how they anticipated, and people read into these words. Oh, they said uncertain rather than, inability to read the future. Like, there's all these different things like, oh, the wording had slightly changed from likely to, somewhat or something like this. Like, oh my gosh. Fed removed any comments about risks to labor, pointing to less cuts this year. Yeah, I don't know. Let's check the Fed watch, but my assumption is we're still going to get 2, maybe 3 cuts this year. We have a new Fed governor coming in. He's extremely dovish. I'm thinking of Rick Reeder, but honestly, they're all dovish. 30% chance of 1 rate cut, 33% chance of 2 rate cuts, 19% chance of 3 rate cuts, 6% chance of 4 rate cuts this year. Okay. This is great. I don't mind this at all. Onward and upward. Now we focus on earnings. Companies to focus on today. Let's bring up the earnings calendar. So companies to focus on, obviously, we have the likes of Tesla, Microsoft, Meta, ServiceNow, and Lending. Well, not Lending Club. I don't really care about that. But IBM. I freaking hate this thing. Can I highlight IBM? There we go. Lamb Research as well. Celestica, FICO. That might be an interesting one today as well. Whirlpool, if people are, or Whirlpool is an interesting one for retail investors. But there's not too much. Mainly, it's all big tech. This is whenever we find out if the software names are dead. ServiceNow is going to be really important for that. Capital expenditures and advertising, Microsoft, Meta, very important there. Tesla, more commentary is what we're looking for. Commentary on the recent changes in full self-driving, the timelines of Optimus, overall sales after the takeaway of, what do you call it? The FSD credits, the $7,000 plus discounts on the Tesla cars. So that was in Q4 that they had taken that away at the end of September. So, how are sales going to be impacted for Q4? What do they expect sales, and how are they going to be impacted for 2026? A lot of information today. Probably going to be one of the greatest, earnings days of the year. Okay. Let's see. Please take 5 minutes to cover Celestica. I'm sure we will tonight. Yeah. Or like in an hour plus. Noto speaking today, right, with Becent? Yeah, I think he was there because their company is helping with the Trump accounts. SoFi is, yeah. But SoFi stock is taking a little bit of heat. Yeah, I think 3 cuts for full year 2026 is something that I would really like. Obviously, people can be much more bullish there. It does depend on the labor market, right? Like, there's a higher chance that we get rate cuts if the labor market is a problem and inflation is not a problem. That's the hope. Okay. Circle just said White House is to set up a meeting with banks and crypto firms over the stablecoin bill fight. With banks and crypto firms, they literally know that the politicians and everything are completely bought and lobbied by the banks and crypto firms. So they have to bring in those companies to actually talk about it, so then they can get the politicians to act right underneath those companies. It's crazy, man. That's per Reuters. Yeah. Let's see. Carvana is a dog. Yeah, Big Short report today. I predict 55 to 65 cents of EPS in 2026 and 30 to 32% revenue growth. The interesting thing is, who even cares about SoFi's guidance? Do you guys remember what they originally guided for? They guided for 25 cents of EPS in 2025. We're about to finish the year at roughly 38 cents. They guided for 25, and we're about to get 38. At what point do we stop even reading into guidance? Do you think Noto's going to sandbag? I sure hope not. He's got what is it, like 200 million, almost $200 million hanging on the fact that he needs this stock to get above $45 essentially by May. May at the latest. It's at 25. You got to double this company this year in order for him to get paid. Who cares? Stock price cares? That's not how it works. Stock price is not stock price doesn't have opinions. Investors have opinions. Investors should realize that the guidance is sandbagged and that, it's probably not going to come in that low is what they say whenever we see the numbers at earnings this Friday. Oh shit, when you had the pot plant behind you, dude, I'm upgrading every day, okay? Life is about, improvement. I got the pot plant. I got some books. It's a brand new year. The books have been there, but then beating it means nothing. Well, I think that whenever Wall Street comes out and they assess that the company is at the same level of guidance, like whenever SoFi came in, they said we're going to do 25 cents of EPS. That's what Wall Street believed because they're morons. Name one book on your shelf. Now, this is a trick question. No. They're all fake. It's like one of those, it's like, what is it? Wallpaper. They're not actually books. We are very lucky to close above 27 on Friday. We don't know yet. We'll see. People act like SoFi has not ran up 20 plus percentages on an earnings day. I mean, it does happen. Who cares about Canada's Fed decision? I mean, I don't even care. I live here, dude. No, they're not seriously not real. I can go like the real books, dude. I got the books. You like my selection of book there? I did that one just for the memes. Whenever AI and Rocket Lab and IONQ and all of these names end up doing well, I use that as Tinder for the fire. Intelligent investor, my ass. Quantum stocks to the moon. Chapter 7, baby. Okay. Let's see. Bloom Energy is worth more than SoFi. Is that true? I mean, but they probably are worth more than SoFi. Which one's solving a bigger problem? One's a neobank. There's 4,000 neobanks. How many companies are trying to solve the energy problem for the biggest technological transformation of all time? Like, I don't actually think that that's a wrong assessment. Let's see. Now, SoFi didn't run up into earnings. Positive earnings could give a big swing. Yeah, no, 100%. Completely agree. Okay, what time is Meta earnings? So essentially, all these companies are going to be reporting actual numbers at 4 o'clock. We'll be going crazy trying to dive through, finding all those numbers. Okay. The call is at 4:30 to 5:30. Mark Zuckerberg better be on his toes. Don't talk about your glasses. Don't talk about your Meta Labs and the $80+ billion that you burnt making the Horizons metaverse that no one uses. Okay. VR does well at kids' birthday parties, but no one actually uses this stuff. Talk about advertising, conversion rates, and how artificial intelligence is allowing you to grow at 20+ percentages. Highlight to the market that the reason why you're putting up that continued high growth, that's $50+ billion of revenue each quarter, is because of artificial intelligence. It's almost like the thing that Jensen always says: the more you buy, the more you save, right? Or the more you make. But Meta, what they need to say is the more that they buy of these chips, the more money that they end up making in advertisements. Sodak Zach just showed me that I was showing the intelligent investor on screen, yelling into the camera as I'm showing SoFi stock being down a lot. Gosh, whatever. What Tesla needs to do is just, Elon's been doing fine in the earnings call. He just needs to not be so sad. I don't think he'll be that sad on this call, though. A lot of things have been going right for him. He's one of the richest people again. I mean, by far the richest person again. So, he's got to be happy and joyful on the call. For real, I know it sounds silly. Like a lot of investors should look forward to 10 minutes, by the way, till the JPOW on screen. But a lot of sentiment might push you in the direction of, hey, you know what? These companies need to put up good numbers in order for their stock to go up, but not Tesla. Tesla's here to pitch a story, okay? A story of future growth. And I don't even think that's wrong. I'm not even suggesting that that's a bad thing. It's just he needs to keep talking about the robots, when they come, when full self-driving happens, and how they're going to make recurring revenue. Will Nebius pump during Meta earnings? I wouldn't really think they're too correlated. I mean, you can make some assessments during that, but they have a huge deal with, they have a small deal with Nebius, $3 billion. They have a much bigger deal. I think it's $12 billion with CoreWeave. So they're really tied to CoreWeave. Maybe that is some upside for them. AMD, they're the biggest customer of AMD chips, so that could be very big. And obviously, NVIDIA, every single customer is a large customer of NVIDIA's. So, but yeah, AMD on Meta's call. If they talk about Meta Compute, which I hope and pray, dude, nothing would make me. I'm gonna need some pasties right now. I gotta cover up. Nothing would make me happier than him do 10 to 15 minutes on the reasoning for the Meta Compute call. Me as a semiconductor investor, in AMD, NVIDIA, these names would do very well if he could articulate why he needs to spend hundreds of gigawatts into the future of compute. For real. How do you know what pasties are? How old do you think I am? It's like whenever your kid's like 14, they say a word that you didn't expect them to. You're like, sit down. Who told you that? How'd you know that? How'd you know that word? It's because I'm a runner. Meta Compute very bearish for neoclouds. How? I'm not even suggesting you're wrong. Investing for Freedom is he's big in this space, really big. But I'd like to know, because they're buying up a lot of those companies. Okay. You're right, but he won't do that. I mean, there's a good chance that he does talk about Meta Compute, and at least in my opinion. Tanner, you look like some kid in your parents' basement. That's a compliment. Thank you. Thank you. Yeah, I'm actually upstairs in my own house that I bought with my own money. Meta can pump if they say something conservative on cap. Yeah, but they're not going to do that. They're not. I agree with you. That's why I haven't purchased before earnings. Is he literally came out in Q1. He came out like a month ago, maybe 3 weeks ago, to talk about their new project called Meta Compute, which means they're going to do tens of gigawatts this decade and then hundreds of gigawatts of power to function to fulfill data centers of into the foreseeable future after that. So how can you make those comments and then come out and say, yeah, we're actually cutting back on capital expenditure spend? How's that possible? Okay, we will transition to the FOMC call and listen to the great and powerful Jerome Powell, who's doing a fine job. Do you have any opinion on Cloudflare? I think they're going to continue to do well, honestly. They're going to do really, really well. The more... let me get up the Federal Reserve as well. Okay. The more time that they... the more time that is spent online, the more agentic commerce, the more agents that are online, the better that they're going to do over time. Have an opinion on Hood? What's up? I love Robinhood. Jerome wasn't built in a day. When in Jerome, do as Jeromans do. Those are funny ones. Purple tie, definitely purple tie. We got purple tie. Does he cough? Who's got coughing on the menu? Elon Musk said humans can see again in 12 months. Neuralink vision implants coming in 6 to 12 months. It will write directly to visual cortex. Worked in monkeys for 3 years. It'll start with low resolution, but the long-term goal is to get to superhuman vision. We are living in a crazy future. Good afternoon. Good afternoon. Purple tie. Yeah. I think he will decline to speak on the ongoing investigation, but will be asked multiple times. I completely agree. He's not going to say a single thing. Wait till you have to pay $99 a month to keep those working like he did with FSD. You wouldn't pay $99 a month for vision? For vision? Bro, you're cutting yourself short. People hate subscriptions. I was talking about my Whoop the other day. I was like, yeah, I spend $20. And people are like, no, dude, I wouldn't even pay $99 for vision. And then you go out and you buy a NVIDIA, 5090 series for $5,000. He put the parents in the basement instead. No. I live close to my dad, though, which is nice. I should go and see him more often. I gotta go visit him. Okay. To be fair, Whoop is pretty expensive. No, it's not. It's good. It's $20 a month. Like you pay $20 a month to listen to music. Take care of your health. Okay, we are 10 seconds away, if we're not late. Brother, glasses are free monthly. Not to people that their visual cortex is messed up. Their retinas are detached. Tell your dad chat says hi. He does say hi sometimes. Oh, is that purple? That's a purple tie. Good afternoon.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we've lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously, and I guess in 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in, which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timros, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11th. I'm not going to expand on it or repeat it. So I'm just not going to, this is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it? Yeah,
I just don't. We don't talk about the dollar. We don't talk about what moves it around. it's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course, no one knows with any precision. Is that, you had a follow up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira.
Thank you, Chair Powell. Mara Moakley from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook and all that. And, we're in a position where, we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the two goals and how big those and quantify them. And so there are different views on the committee, and we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2% x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the mandate as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted, and I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. risks to both of the variables are a little less. I think that the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments too on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now. Anybody's base case that the next move will be a rate hike. But ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment. And so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with. And that, in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So this isn't, I'm not talking about the US context, this is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, it's, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important. And the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Thanks. Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. It's just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, or strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions, and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. And, consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from. But the economy overall, the growth is on a solid footing. It looks like, and it's not just those things. It's just the consumers. The consumer is filling out, surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and, reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control and, frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build out as being positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs? And how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time is rising productivity. So and we always ask, well, this is going to be different, is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Thank you, Chair Powell. Bayi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December. And that's pretty much what we had the year before. So on net, no progress. But the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs. And ultimately, we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period. And you can see for that tariff, how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that. And our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But, we'll be able to see whether things are moving in that direction. I think, we'll be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it, as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth. You've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output. And it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Another is that, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind-Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model. And we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution like happened in the 90s here and like maybe happening now with AI, we're all over that. And, everyone studies those periods and, we're very clear-eyed about the possibility that this higher productivity may persist. and also that it may not. We're not, no one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time?
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything. And so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data. And our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay. Thank you very much.
Ladies and gentlemen, there wasn't too many comments that stood out for me being extremely strong there. I mean, not a lot of new commentary. The commentary around gold and silver rising is not in the effect of people thinking that they're concerned about the United States. I think is a little bit, surprising to say the least. But ladies and gentlemen, so let me update you on the rest of the day. I'm going live again at 3:30. I will be reviewing Meta, Tesla, Microsoft, ServiceNow, and the many other companies that are showing off earnings tonight. We'll be listening to Meta and Tesla's earnings calls. They run in tandem, so we can listen to Meta and then Tesla. So that'll be good. I was able to bump out some lunch while we listened, but yeah, literally going live in 12 minutes. So, go pee, refill the waters. We're back to work. It's a full day of live streams, and that's essentially how it's going to be for the next 6 weeks. We're in earnings season now. This is when things get interesting, okay? This is when a lot of money changes hands. People get fearful. People get excited. We end up finding out about new capital expenditure plans, talks of guidance for 2026. How strong is the economy? What are the largest and smartest CEOs in the world saying about how we are going or expected to perform over the next 12 months? Thank you all so much for watching. Really do appreciate your time. But until next time, bye for now. And by next time, I mean 10 minutes from now.